I want to tell you about the investment strategy my daughter uses. She does not watch the market. She does not read financial news. She set up one automatic transfer 4 months ago. And last month, when markets dropped, her account actually benefited from the drop. Here is why that happened, and how you can do the same thing. Most people think investing during a market crash is scary. What if I told you there is a strategy where a crash is actually good news? Not just okay, actually good news. This strategy is called dollar cost averaging, and once you understand how it works, market headlines will never stress you out the same way again. In fact, dollar cost averaging equals crashes are your discount season. Here's the core problem it solves. Every beginner investor faces the same question: when do I invest? Do I wait for the market to go up? Do I wait for it to come down? What if I invest today and it crashes tomorrow? That paralysis keeps most people out of the market for years, and those years of sitting on the sidelines are the most expensive financial mistake available. Dollar cost averaging removes the question entirely. Here is how it works. You invest a fixed amount of money on a fixed schedule. Every month, on the same date, the same amount goes into the same index fund. You do not check whether the market is up or down. You do not decide whether this is a good month to invest. The transfer runs automatically. Every time. Fixed amount, fixed date, every month, no decisions. Now here's the beautiful part. When the market is up, your fixed amount buys fewer shares. When the market drops, your fixed amount buys more shares. Let me show you with real numbers. You invest $500 every month into a total market index fund. Month 1. Price: $100 per share. Your $500 buys 5 shares. Month 2. Market drops 20%. Price: $80 per share. Your $500 buys 6.25 shares. Month 3. Market drops further. Price: $60 per share. Your $500 buys 8.33 shares. 3 months. $1,500 spent. 19.58 shares. AVG cost $76.60. Total spent $1,500. Shares owned 19.58. Average cost per share $76.60. Now the market recovers back to $100 per share. Your 19.58 shares are worth $1,958. You spent $1,500. You made $458. 30.5% return on a market that went nowhere. On a market that went down and came back to exactly where it started. You made 30.5%. That is how dollar cost averaging turns crashes into opportunities. A Schwab study looked at 5 different investors over a 20-year period. Investor 1 invested at the market's lowest point every single year. Perfect timing every time. Investor 2 invested on the first day of every year. No timing at all. Investor 3 invested at the market's peak every single year. The worst possible timing. Investor 4 spread their investment equally throughout each year. Investor 5 kept their money in cash, waiting for the right moment. Worst-timed investor still nearly tripled their money. The worst-timed investor, who always bought at the peak, still nearly tripled their money. The investor who kept cash barely doubled it. Being invested beats waiting. Always. Here is how to implement this on a variable freelance income. Do not base your contribution on what any individual month paid. Base it on your income floor, the conservative, consistent amount you pay yourself every month. If your income floor is $4,000 per month, set your automatic investment at 15% of that, $600 per month. Investment amount equals 15% of your income floor. Set it up at Fidelity or Vanguard. Choose one fund, FSKAX or VTI. Set the recurring date to the day after your most reliable client payment. Enable dividend reinvestment. That is the complete setup. One afternoon, runs for 25 years. $500 per month. for 25 years at 7% average return. $500 a month, 25 years into $405,000. You contributed $150,000. The market added $255,000 on top. More than half the final balance is money you never deposited. The crash months? Those were the months you bought the most shares. Those shares recovered the highest. Those months were your best months. Here is your action step. This week, 1 action. Open a brokerage account at Fidelity if you do not have one. It is free and takes 10 minutes. Set up 1 automatic monthly purchase of FSKAX, even $100. Enable dividend reinvestment. Then, do not check it during market dips. Let the strategy work. Drop a comment below. What has stopped you from setting up an automatic investment until now? Just 1 sentence. I read every single one. If this changed how you think about market drops, tap the like. It takes 1 second. Subscribe now. New video every Tuesday, Thursday, and Saturday, where I share real financial tips on how freelancers can grow their wealth.